Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. The top headlines of this hour. Nifty Sensex hit fresh highs in opening trade. India wicks advances. And open interest surges in VGUARD and DEML as traders take fresh positions in their respective stock futures. ICICI Bank gains as much as 3% in opening trade as Street cheers the bank's cleanup act. And Reliance Industries is up more than 1% after a strong performance by the petrochemicals and retails businesses in the company's June quarter. And it's a muted listing for TCNS Clothing as the company lists at almost the same level as its issue price.
Okay, those are the top headlines at this hour. But before we get to the F&O market, let's go across to Vishwanath Nair, who joins us on the phone line to talk about RBI's latest move on stressed accounts. Hi, Vishy. Good morning. Tell us what you're gathering.
Good morning, Navneet. So what the RBI has done is that it's created a list of stressed accounts. Most of these are accounts which we have already heard of as being classified as NPA. And it has gone to each individual bank involved in those accounts and tried to find out their level of provisioning, the reason why a certain amount of provisioning was not made for these accounts. So all these clarifications were sought from bankers. At this stage, that process is still going on. So once the RBI has responses from all the bankers about the provisioning against these accounts, they will compare those responses and then come up with a sort of series of actions against to be taken against these bank accounts. Most likely, it would result in elevated provisioning against some of the accounts which they have found where the provisioning is lacking currently. So eventually what is going to happen is by the end of this calendar year, by December 2018, we would have a list of accounts where banks would have to make higher provisioning, and then that could result into an impact on their results.
Okay, thanks a lot, Vishy, for joining us and giving us all those details with regard to RBI now monitoring the cleanup process of all these banks. But focusing back on the markets with regard to futures and options market, what we're getting to see, well, it's fresh highs once again for Nifty, Sensex and Bank Nifty in today's trading session. In fact, in the opening session, we did see Nifty surpassing the levels of about 11,300. But let me also highlight the India Volatility Index this morning has surged and surged quite sharply, I believe. Last when I checked, it was up almost 5%, so inching very closer to the mark of 13. Let's just pull up the Nifty futures and check whether there is any sort of open interest build-up in the morning trade or not. 1.5% higher with regard to Nifty futures and Bank Nifty futures, which did see long positions coming about in Friday's session. Another 9% just in the first 40 to 45 minutes of trade, but Bank Nifty futures are trading with a discount of almost 23 points. The top sectoral gainer this morning is the Nifty PSU banking space. The gains are being led by from the likes of State Bank of India, which is the biggest heavyweight in that index with almost weightage of nearly 60%, 3.5% higher for Nifty PSU banking index. Quickly, let me tell you what's happening on the option front. We've seen put trading continuing for strikes like 11,200 and the 11,300. As you can see on your screen, the 11,300 put strike has added nearly 2 to 2.5 lakh shares. And on the call side, the out of the money strikes for the likes of 11,600, 500 and 400 are seeing open interest addition. The range for this series remains 11,000 on the downside to about 11,500 on the upside. But most importantly, we're getting some positive cues from the FI front this time around. We did see them buying almost over 700 crore in the cash segment, but look at the F&O data in the index futures. They bought 18,000 contracts on the long side, so that the ratio, if you look at in the longs into short, is almost buying 2 contracts for shorting every 1 contract, and the positioning now is almost 60% on the long side. Let's just pull up the index options data as well, where they bought a lot of call contracts and they also wrote put contracts, which are, remember, bullish bets. So good cues coming from the FI front.
Well, Navneet, in terms of stocks, there are some unusual ones which are showing up. Of course, early days on July series, but we have the likes of VGUARD right at the top. We're adding 17% in open interest. Fresh longs there, and fresh longs in Repco Home Finance as well, even as the underlying advances by around 4.3%. You've seen a 15% addition in its open interest. BEML is the other one, up 7%, and fresh longs there as well. Apollo Hospitals seeing a good traction when it comes to futures and options space. However, it's on the decline and fresh shorts building in. But SRF, on the other hand, of course, it's up as much as nearly 3% and another 12% added in open interest. So on the whole, the momentum is clearly with the gainers, even in the broader markets. Not too much to speak for those in unwinding, but I'm going to keep an eye on something like a VGUARD Industries, Repco Home Finance, and BEML today. Okay,
so a lot of stock futures moving around this morning, and we'll get your views on all these stock futures from our guests. But before we get them on the show, here's a reminder for you all. If you have any queries in the futures and options market, please call us now on 022-4540-4141. You can write to us on Twitter, Facebook, YouTube with AskPQ hashtag. Let's welcome our F&O experts then. Amar Singh of Angel Broking and Chandan Taparia of Motilal Oswal here with us. Good morning to both of you gentlemen. Appreciate you coming on the F&O show once again. Chandan, let me come to you. The cues are quite positive. We're trading around the all-time high levels. What should be the approach now? Do you find the markets being overbought?
See, looking at the market setup in the last series, Nifty gained by around 5.5%. We have seen rollover of around 74% with roll cost of 0.30%. Market-wide rollover were around 90%. Bank Nifty has seen rollover of 78% compared to 75% average 3 months rollover. Market is continuously making high highs, high lows from last 6 to 7 trading session, and till this trend remain intact, the positive stance could continue in the market. However, it has stretched a lot after its breakout above 10,929 and rallied by around more than 400 points from those zones. So some pause could be seen, but again, the inherent strength or the overall trend would remain positive in the market. So we'll continue to be on buy on decline kind of strategy. Immediate support is near to 11,250. So those who are looking to trade on the market with current trend, then my suggestion will be buy with a stop loss of 11,250, and upside it can head towards 11,380 kind of zone.
Okay, well, that's a positive bias when it comes to the benchmark. But Amar, good morning to you as well. How are you reading trade at this point in time on the benchmark indices?
Yeah, very good morning. Definitely the uptrend remains intact, and what we are witnessing in Nifty and Bank Nifty is that it has been, once it breached the earlier key resistance level for Nifty was around 11,172. That was the earlier all-time high. So taking that route, it has been steadily progressing on the upside. And also, if you look at the data in terms of the rollover, Nifty rollover at 74%, it's the highest in this calendar year. So clearly reflecting that there is still some interest in this major index. We'll have to watch out for how the advanced decline plays out, because that also has been positive over the last few days. So that if that continues to be, because it has to be, if the rally is to sustain, then it has to be a broad-based rally. It can't be a few blue chip stocks or the large heavyweights counter alone. So that's something which we definitely need to watch out. As far as the trade is concerned, one can look at buying Nifty. Any dip towards 11,280, 11,290, ideally that should be a good level to buy with a stop loss of 11,224 and a target of 11,398 on the upside. So the trend definitely remains positive. Any pullback can be used as a buying opportunity. As far as Bank Nifty is concerned, Bank Nifty continues to remain strong, primarily on the back of, if you look at, primarily on the back of the public sector banks. And also if you look at SBI, SBI continues to gain in strength and momentum, and it continues to trade strong. So Bank Nifty is also a buy. Now the crucial support for Bank Nifty, currently it's around 27,700 levels. So now the crucial support for Bank Nifty is around 27,200, 300 zone. That's a very crucial support zone for Bank Nifty. So any buying on correction can be used with the stop loss below 27,300 and a target of 27,950 on the upside. But one needs to be prepared for increased volatility in coming days.
Okay, and that we're already seeing on the screen today. India VIX is up almost 5% in trade. Chandan, would you recommend taking any fresh long positions on Nifty or in Bank Nifty futures today?
Yes, already discussed about the trend that is positive, but yes, we have seen jump and spurt in the India VIX by around 5 to 6%. So that indicates that some volatility could be seen, some dip could be seen, which would be again bought. As mentioned, that 11,250 is the immediate support for the Nifty, and 11,171, there is the previous swing high, will be the major support of the Nifty index. We have seen put writing at 11,200, maximum put wise at 11,000. Fresh call writing is happening at 11,400 while maximum call open interest is 11,500. So the option band signifies the overall positive stance, but yes, some volatility could be seen or a decline could be bought in the market. Talking about the Nifty Bank, we have seen 78% rollover. It has recently given a breakout above 27,652 kind of level. So on downside 26,400, 27,400, 27,500 will be the immediate support. While on upside now the next target is near to 28,000 for the Bank Nifty Index.
All right, but we're going to shift focus to some stocks then and take our experts' opinions on the stocks that they'd like to bet on. So Amar, coming down to you, what stocks are you betting on today's job trade?
I would say the first is Cadila Healthcare. That's one stock one can definitely look at, because what we are seeing in the pharma space also, that the pharma stocks are also moving, and there is a positive technical trend in Cadila Healthcare. So Cadila Healthcare can be bought on a dip towards 374 levels with a stop loss of 363 and a target of 393. So that's one stock I would recommend. And the second is from the public sector bank, that is SBI. SBI in particular, if you look at it, the way it has been rallying from almost 250 odd levels, currently it's around 300 level. So the trend definitely remains positive, I would say. So SBI can be a buying opportunity, but only on a correction towards 290 levels, because that's a good level to buy. So on any correction, one can look at buying with a stop loss of 284 and a target of 306 on the upside.
Okay, Chandan, what about you? Stock future strategies for the day?
Stock-wise, a couple of names. First is the buy on KSCL, Kaveri Seed Corporation Limited. The stock has given a decisive breakout on the weekly scale and now require a small follow, which may take it to new high territory on a yearly basis. It is forming the pole and flag pattern, also given a breakout. So small follow could lead it to 630, 640 kind of zone. One can buy with a stop loss of 595. Second trade is buy on Titan. The stock has formed a reversal pattern on weekly scale. It exactly taken support at its 50-day exponential moving average. Even on Friday, it has seen the strong consolidation breakout beyond 860, 865 zone. So here momentum could extend to 935. One can buy with a stop loss of 880 zone. One more stock, that is Engineers India. This stock is now forming the bottom process after the weakness of last 5 to 6 series. The stock is managing to hold near to its 50-day exponential moving average. So recommending to buy on a small dip with a stop loss of 131 or 130. Looking for an up move towards 142 to 144 kind of level.
All right, some very interesting stock strategies coming in, but let's talk about some active stock futures at this point in time. And let's address something like VGUARD Industries, and there has been very little traction when it comes to its underlying. However, there has been a surge in VGUARD when it comes to its open interest. When you consider the stock movement, if we can actually pull that up, we have seen substantial movement in VGUARD, although it's not always the one which shows up, when it comes to changes in OI substantially. At this point in time, up as much as 1.4% on an intraday basis. It has moved above levels of around 220. This is your 1 month chart. You're seeing about 10% gains coming in as far as VGUARD is concerned. It's moved below the levels of around 185 over the last 1 month, but since then it has picked up and it's now around 217, 218. Amar, if I can take your view on VGUARD Industries, how are you reading the underlying variables in the stock, and what would you recommend, or what levels would you watch out for, say, if someone were to take a position in this one?
No, I would not recommend buying or going long in this stock at the current levels, because this is a level, I would say, 220, 223 zone. That's a very strong resistance zone, and the stock is likely to meet with strong selling pressure, and also the stock would meet with that's a stiff resistance zone. So I would recommend that those who are long, ideally they should book profits around these levels, and I would not recommend going fresh long at these levels in VGUARD currently.
Okay, not recommending taking any fresh long position, but remember the open interest has surged this morning for this one. The space which is buzzing, as we highlighted, is the PSU banking space. So State Bank of India, I think Amar does have a long call on that one. But Chandan, coming to you, anything from the PSU banking lot, from the likes of PNB, which is surged in today's session? You've got something like Union Bank also trading higher, and Bank of Baroda, Bank of India, all of them are witnessing substantial uptick in today's trade. Would you take any fresh trade on any of these PSU bank?
We have seen bottom out process in the PSU banking index after the consolidation and the weakness of last many months or many series. We have seen some put writing activity, and that is happening after a long time. So that is giving a clear stance that some bottom process already been done in most of the PSU Bank counter. I'll prefer with Bank of Baroda, however, it has rallied by more than 7-8%, so I'll wait for any small decline. As of now, 140 to 143 will be support. Upside, it can head towards 155 to 158 kind of level. I'll look at the SBI on a small decline near to 285, where I'll put a stop loss of 278 for an up move towards 303 kind of level. Union Bank, yes, it has surpasses 50-day exponential moving average. So even at current levels can be added with a stop loss near to 84 for an up move towards 93, 94 kind of level. So I think PSU banks have bottomed out, already forming the high top high bottom, but require a small decline or dip to get the better risk reward ratio to continue with the position in these counters.
All right, let's talk about an IT company then, and by that I mean HCL Technologies, which came out with earnings which were largely mixed, I should say, because there was a little bit of a miss when it comes to its top line in terms of revenues. And well, on the other hand, we did see a little bit of an expansion when it comes to margins at around 19.7%. But this is largely because of the fact that the wage hikes have been delayed, and they will come into effect in the second quarter. Net profit has risen by as much as 7.9% to a little over 2,400 crores. And the 2 points that stand out in this quarter's earnings is, one, that the banking and financial services vertical did see a decline of around 1.5%. But this was largely on account of ramp downs in certain well-planned projects, and these were planned ramp downs, as the management has suggested. We are also seeing a decline around 1.3% when it comes to its manufacturing vertical. That said, the strength in this quarter is coming on the back of something like Mode 2 and Mode 3. Now, these are modes of businesses which are more to do with the new technology and products businesses, and that's where they've seen a surge in terms of growth to counter Mode 1, which gets about 75% or 3/4 of its revenues, which has seen a lackluster less than 1% growth on a sequential basis. And this is something that the management has said that eventually they are expecting the contribution of Mode 2 and Mode 3 businesses to contribute even further as we move into the next few quarters. But for now, given the fact that there isn't too much to speak for in terms of organic growth, and also the fact that, well, your revenues were largely in line, we're seeing about a 0.5% decline here, at least as far as the underlying is concerned. And even though that HCL Technologies is now the third largest company in terms of revenues, taking over Wipro when it comes to Indian IT services and the industry. For now, we're looking at a decline of around 0.5%, and not too much to speak for when it comes to its futures and options, well, futures specifically in terms of open interest. Chandan, may I take your view here on HCL Technologies? From the charts, it seems that it's close to its daily moving averages, some crucial ones. Not too much to speak for in terms of technicals otherwise. How are you reading trade on this one? Are you expecting some consolidation, an up move, or more weakness?
See, I'm first looking at the Nifty IT index. Here I am getting some sort of pause in the positive momentum, because from last 10 to 15 trading session, the Nifty IT index has been respecting to its multiple support near to 14,420, and now we are near to the same level. So if this support is broken, then some weakness could be seen in most of the IT counter. And already we got a signal from Infi and TCS that these counter are witnessing cold writing and the built-up of short position. So CNX IT or Nifty IT is near to very important level. Talking about Infosys and TCS first, this Infosys fell to surpass its major hurdle of 1393 kind of zone. Cold writing is visible at 1400 strike, and it exactly taken hurdle at its rising resistance trend line. Similarly, TCS also broken the immediate support zone and falling from last 3 to 4 trading session. So nervousness is clearly visible in Nifty IT or IT index, and selective events are finding pause. HCL Tech has been consolidating in a range, but supply is being observed at higher level. It has been consolidating near to 50-day exponential moving average, but has to hold, then only some Q could be seen. So my suggestion is 945 is the immediate support. If someone is holding the position, then strictly followed to a 945 kind of zone, because if 945 is broken, then the stock can correct towards 910 kind of level. While on upside, if it moves about 980, 985, then only some stability or conviction would be there, which may take it to 1010 kind of level. So some pause in positive momentum is there, and those who are holding are suggested to keep 945 as a stop loss, as Nifty IT index is finding pressure from higher levels.
Okay, that's the view coming in on HCL Technologies. The stock is now actually trading in the red with cuts of 0.5%. I also want to highlight the markets actually. They have slipped into the red after touching all-time high levels in the opening session. So Nifty, Bank Nifty, Sensex, all of them have seen some bit of profit booking, probably to call it, at higher levels. And Sensex also just about off the day's low that we've seen. Bank Nifty is also just about trading flattish now with gains of nearly 23 to 24%. Remember the advice which came in from our experts Chandan and Amar was to buy on any sort of decline. So we've seen that one decline at least coming by, but there's a query also which has come on YouTube. One of our viewers has shorted Bank Nifty today at around levels of 27,700, and I believe now he's in the money because the Bank Nifty futures are currently trading somewhere about 20, I think below the mark of 27,700. Yes, at about 27,660. He wants to know if he should continue with his position or just book profits. Amar, I'll come to you. Considering the view was buy on declines because the momentum is looking pretty good. So if somebody took that risk of shorting the market at higher level, and that to Bank Nifty at 27,700, would you recommend them booking profit or hold on?
No, I would definitely recommend that at least he should trail his stop, and if Bank Nifty corrects by further 30-40 points, he should ideally book the profit. But I would recommend that since he's trading against the trend, he definitely needs to have a stop loss in place. Otherwise, if the trend reverses, then he could be in some further trouble.
Okay, so when it comes to the advanced decline ratio, that has also changed to a certain extent, not drastically, but certainly has changed a little over the last 15-20 odd minutes. And as you can see, there's just a slight bit of convergence between the red line and the green line. That said, we still have two advances for one decline at this point in time, so nothing to complain about. We just need to keep some of these technicals in place. Let's also pull up some other, buzzing stocks. And so I want to pull up something like a BEML, and BEML again is standing out in trade right now when it comes to its futures and options. Changes. Of course, futures in this case specifically, its options is not very liquid, but BEML is also advancing in trade by as much as nearly 7%. Open interest surging by 17% at this point in time. Chandan, if I can come to you and take your view on BEML, it's currently at around 881. Any position can be taken in BEML right now?
See, after the weakness of 9 consecutive series, the stock is finally bottoming out. We have seen sharp selling pressure in last 8 to 9 series. It started from November 2017. In the last July series, it formed a doji candle, and which is giving an early sign of the bottom out process, and already it has seen the strong recovery from lower levels. It has recovered from its multiple support of 735, 750 zone, so that is also respecting. It has surpassed its first hurdle of 850 kind of zone. So holding above the same has potential to witness some short covering, which may take it to 920 kind of level. But yes, major trend was negative, and this is the bounce back in the major trend. So sharp short covering or momentum could be seen where one can reduce the position or can liquidate.
Okay, that's BEML for you, seeing both price action as well as open interest addition in today's session. The reason why markets may have fallen from the highs is because your heavyweights like Reliance Industries, which at one point of time was trading with gains of 1.5%, that's now trading just about with gains of 0.5%. You've also got something like HDFC Bank with 10% weightage on Nifty, that's trading in the red with cuts of 1%. But the other heavyweights which are supporting today's trade is ICICI Bank. That's up almost 2% in trade, reacting to its numbers. Amar, if I could come to you in ICICI Bank, would you recommend if somebody had taken a long position on Friday to continue with their long position, considering today's opening has been on the upside?
Yeah, overall looking at ICICI Bank, we are seeing that the stock has definitely formed a bottom around 260 odd levels, and it has rallied from there. But if you look at the stock has upside resistance around 302, 303 initially. So if those who are on the long side, ideally they can book their profits around those levels, because if it consistently is able to sustain above 203 odd levels, then it can rally towards 315, 320 odd levels, and the probability of that happening definitely remains there. But for that, it needs to consistently breach above the 303 odd levels.
All right, we have another interesting query, and this one is on Bank of Baroda. We have Vijay Kore on Facebook. He has the 160 call of Bank of Baroda, which has been bought at around 3.5. and he wants to get an idea of what we can do with this position. Can we take a look at the futures as well as this specific call? This specific call is trading at around 4.35. So Vijay is sitting on a little bit of a profit right now. Let's take a look at the futures as well and see what Bank of Baroda is doing. It's currently at 150. That's its August futures. And considering it's a 160 call, it's still 10 points away from it going in the money. That said, there is a surge of 9% when it comes to its underlying, and its open interest has also increased by around 8%. So Chandan, I'm going to throw this question to you. What would you do with Bank of Baroda? What would you recommend the viewer should do? Hold on to his position or book profit at this point in time?
We've seen momentum in most of the PSU banks already. We've discussed about the same. And I think this momentum could continue as we are heading towards the RBI policy also. Volatility in the option premium could remain intact. Today itself it has rallied by 8% with open interest addition of around 8 to 9%. In last 3 to 4 trading season, we have seen short covering led by built up of long position. It has formed a rounding bottom process. So once it can head towards 155, 158 zone. So we can continue to be with the option position by keeping the trailing stop loss of 144 in the future level.
Okay, that's the advice coming in on Bank of Baroda. Just one more stock I want to highlight. If you could just pull up GSFC, which is there in the futures and options space as well. We've seen some surge coming about for that one. That's sitting with gains of 5%. Just to alert our viewers, the earnings for this one come out tomorrow, so watch out for GSFC. Amar, very quickly, any initial thoughts on the surge that we've seen on this counter?
Yeah, overall, looking at this particular stock, what we are seeing is the short-term trend definitely remains positive, and the medium-term trend also, I would say, is inching towards being positive. But on the upside, close to 119, 120, that's a key level of resistance. So as you said, the results are also due. So ideally, one wishes to take profit at 118, 119. That can be a good level to watch out for. And post the results, one can take a view and position in this stock.
Okay, well, with that, I request our viewers to keep sending us your queries, and we'll have as many as possible answered and addressed by our experts. But with that, I'm going to thank both our experts, Amar as well as Chandan, for joining us and taking us through their views as well as solving some of our viewer queries. And with that, it's a wrap in this edition of the F&O Show, but lots more lined up, so stay tuned into Bloomberg Mint.